Hi, time for the very first Dividend Explorer journal. Today we bought our first share. My $50 limit allowed me to buy 0.6 shares of Merck. Thank God brokers exist that allow fractional shares. It's the first day of deploying my investment system, so I'm very excited. You can follow the Merck investment and also our stock screener on our website dividendexplorer.com. The buying process at my broker was very easy. It just took a few clicks and 60% of one Merck share was mine. Just enough to buy them some flowers in front of their buildings. It's funny that my stock screener picks up Merck to be the first. With the ongoing global pandemic, I would have assumed capital to flock to companies like that, and not that Merck would be undervalued. Also note that it's actually the second stock on my screener. My broker does not allow me to buy or sell this month's top pick, L3 Harris Technologies. Merck has a history of over 500 years. Merck was originally from Germany, but its US subsidiary was nationalized after World War I. We therefore do not need to worry it will go bust. It's been around for half a millennium. When looking at the 9 parameters we check, Merck is doing great along the line. The PE ratio is slightly above 20, but still within a reasonable range. The 2.26% dividend yield is at the lower side, but it has been growing in the past 5 years. Merck has a great debt to equity ratio and seems to sit on a lot of cash. With a profit margin of more than 20%, there is surely enough room to sustain the dividend. The first day, it did show a loss of more than 2%. I made the mistake of buying the stock at open. During the day, stocks seemed to slump ahead of the first quarter reports that will most probably be affected by the global pandemic that started in the first quarter of 2020. It seems the screener made a solid pick. First day is already down, but it's with the volatile markets we have now. You can read more about our picks and our system on dividendexplorer.com. Thank you for liking and subscribing.